What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and portfolio manager in the mining sector. It's a pleasure to have you back on, John. We just came from PDAC. How are you doing today?
Hey, good. Thanks, Aaron. Yeah, it was nice to see you in Toronto.
Yes, it was. It was busy. So, let's talk about the current environment. So, with all the uncertainty in the market, especially the collapse of Silicon Valley Bank recently, which has been headline news, why is it so important to have a credible source for information along with a professional alongside who knows how to navigate the market?
Sure. Yeah. Since we left Toronto, which was around the 7th, right, we started to see some really interesting news materialize with Silvergate and Silicon Valley Bank, and that permeated the financial sector for the second half of last week. That followed, if you remember, Powell being extremely hawkish in his testimony on Tuesday, which roiled the markets. So last week was a pretty bad week if you were long, just the regular market, which we're not. We have a zero position on that. Basically it caused a lot of people to second guess their thesis, right, for what the Fed's going to do and how financials look in general. And is my bank solvent? I'm sure a lot of people were thinking that over the weekend, right? Then on Sunday, Signature Bank was taken out, and then we've had this huge issue with I think it was First Republic today. They were down 50% to start the morning. So when you see down 50, down 70, a lot of halting, this is not what Wall Street likes to see, right? They like certainty. And right now there's very little certainty in financials, which is a major sector of the market. So, we own nothing long financials. We're short financials going into this. We added to our short on March 9 and March 10. I think that it's a show me kind of market, right, Aaron? It's like, show me that we're okay. I'm not putting any more capital long in stuff until I get something to indicate that we're safe. And right now you're seeing a lot of back and forth, right? If you saw Yellen's comments on Sunday, they were almost the opposite of what the Fed was talking about doing. And they were within 2 hours of each other on the CNBC feed. So it must be really difficult for the average person to understand, what to do here. And that leads us into kind of what we were talking about off camera, that free information is just that. It's free. And this is a theme I've talked about on your show for a year and a half. And I don't mean to beat a dead horse, but now I hope your listeners are understanding what I'm seeing and what I'm saying, in the sense that, Jim Cramer on February 8th on his show, he's one of the most popular guys on TV for finance, right, was talking up Silicon Valley Bank. I wrote about that in my newsletter this weekend. BlackRock had a position in Silicon Valley Bank. They're the largest asset manager in the world. So if you can fool BlackRock and Jim Cramer, how are you thinking that you're going to outsmart entities like that, right? It's like, you need someone to take your hand and hold it through a period like this and guide you. And I'm not a financial advisor any longer. I'm not licensed as of 2 years ago, but you need to align with someone like that alongside of people like myself that understand the mining, the energy, the commodity sectors, because unfortunately, most financial advisors don't spend a lot of their time in mining, right? It's probably a less than 1% position for them in their entire book of business. So their focus is asset management, model portfolios. Let me get you at 40 years old to 65 safely. It's not, is Barrick a better buy than Newmont, right? Like, that's the kind of stuff that I can help your listeners with, I think. And I hope that we, get some traffic as a result of that.
Definitely. So can you give us some updates when it comes to everything you've been up to since we last spoke, which wasn't that long?
Yeah, so I mean, we last hung out in Vancouver together, and February was a pretty busy month because the Fed, roiled things right after our meeting, right? We were hanging out around Jan 29, and Feb 1, the party was over.
Yeah.
And the mining sector really didn't get a bid up until probably about 2 Mondays ago. It really got bombed out, and we wrote about that in our newsletter as well, that the relative strength index on GDX, GDXJ, SIL, SILJ, HUI, all that stuff was bombed out. And by bombed out, I mean under 30. When you get to an under 30 relative strength index, it's starting to get interesting, right? It's not necessarily always a buy. but between 20 and 30 usually is a buy. And we saw some names that were getting into the low 20s, and it was like, look, we just had to write about it to say to our followers, who knows where the exact bottom is here, but we've got to be getting close. And we were right. I think it's just difficult for the average investor because they're seeing so many things right now, and it's distracting them from having focus, right? And what we do is we just do mining, we just do energy, that's it. So we don't have all of this other noise around us. We've never put a position in crypto. We've never been long anything technology except for one stock for many years. So we're really focused on the sector. But to answer your question, after that sell-off, we basically went to Toronto. We met with 25 or so CEOs in a 3.5-day period. Got some great information, and I'll be writing up some of those companies in my newsletter on March 27th.
Great. So last time you were on, we were talking about gold, of course, and it was down actually at the time, but you remained optimistic. I'm, of course, a long-term gold bull as well. We've seen a nice rally over the last few days, especially with everything going on. What's your outlook for gold and gold equities right now, given the current environment?
Sure. So we were on your show and other shows saying that 1790 to 1800 would probably hold. And if it didn't, we'd probably test, 1710 to 1740. But thank goodness, 1790 to 1800 held again. And it's like, this is why technical analysis is so important, right? It's like knowing where those lows and the support levels are is extremely important to give you as an investor more confidence to put bids out there, right? Otherwise, to us, it's just a little reckless. You're just putting money to work and not really understanding the backdrop, right? So we do everything technically first, and fundamentals are second. Now, what just happened with all this banking stuff is nothing to do with technicals. That is completely fundamentally driven, right? And so that's where, as a manager, Aaron, we're a little different. We believe in the technicals first, but we're also respecting the fundamentals. We don't do one or the other only like some managers. And when we saw the breakdown in financials starting to really cascade on Thursday, the 9th, we started to get heavily short in a number of different sectors because we thought it would have more of a contagious effect. And we haven't really seen that yet, but I believe that all those shorts we put on are going to make us money. So, yeah, I think right now gold looks very good to the average investor, and probably a lot of generalist investors coming out of crypto, right? Where, they've had a really bumpy ride, and gold is not that bumpy ride. It's a stable, asset that's been around for so long and has a real track record, right? We also love gold equities here, as being an equity manager. That's what we do. And so, we met for 2 hours in PDAC with a guy named Philippe, who's the CEO of Cartier. And Cartier is in Canada. They have a PEA on Chimo coming, I believe, by March 31st. So investors don't have to wait very long for any type of news there. But their drill results in 2023 have been decent. And I think they've been largely overlooked because, again, we had a nice little rally in January. Stock caught a little bit of a bid, but then faded with everything else in February. So I think, something like that's flying under the radar at 7.5 cents US is just really cheap. I mean, I remember one of my peers talking that up at 27 cents, saying it was going to go to 35, and it did briefly touch 35 on the 3-year chart and then never looked back, right? So it's like, if someone's telling you to buy it at 27 and they're wrong, then you look at it cheaper like it is now, and you say, wow, I can get this way cheap compared to where that person entered the stock. And I think that's a positive thing, right? So, but I really think Philippe is a great leader. He's been in the business 30 years. They have 15.5% of the stock owned by Agnico AEM. So, when you see that kind of an endorsement from a major, we always like to see that. Also in kind of gold, copper, Ascendant Resources also left a really good impression on me. I met with Mark Brennan, the CEO, for the first time in Toronto, and they basically have an internal rate of return on their Portuguese project of over 50%. And when you look at the options out there for gold, copper, systems, where are you seeing 50% plus IRRs? I mean, it's not like all over the place, right? And the fact that is Mark's got a background in finance and he's focused on cash flow, which I really like, and a lot of CEOs are just throwing money in a lot of different directions, or some are just so focused on just putting it into the ground only and doing no marketing. I think
Mhm.
Mark has a good understanding of how to balance those two things. And I'm looking for good things out of that stock over the next month or two. They've got some news coming potentially that has been publicly telegraphed.
Those are some great things to look for. So, we chat a lot about gold here. I'd love to get your take on silver and silver equities as well. How do you feel?
Sure. On your show, I've talked about Aftermath Silver many times, and I really like Michael. Michael Williams is the founder there of Aftermath. I like Ralph Rushton, the CEO, as well, and think they have a real plan in place for the company. Not all plans get fulfilled as soon as you'd like, right? But
Mhm.
what I think the takeaway is their recent report, which came out about 10 days ago, shows just a massive amount of silver potentially at Berenguilla, which is their Peruvian project. And they also have a really nice project in Chile. But they sold their project number 3 since the last time we talked, probably Cachanel. That transaction, went through. And I think that a company like that could have some majors looking at them and saying, hey, let's do a JV. Let me take a position in this because they are so beaten up versus the peer group. Also, they have a huge torque, meaning huge leverage to the price of silver. If you look at the chart going back a number of months, when silver rocks and rolls, that stock will move, and that's what we like to see, right?
Mhm.
You don't want to hold a silver junior that's languishing when silver is popping. You need to see that love on the upside, and Aftermath clearly offers that in our view. Also, we've talked in your show about Silver X. I was nice. It was nice enough to get an offer to talk at their recent event with Jeff Christian up in Toronto, and I really enjoyed that meeting. There's a lot of different people in the room, a lot of analysts. There were at the previous event that I was at in January when we were together in Vancouver, they had Brian London in the room, Adrian Day was in the room, Chen Lin was in the room. I mean, these are big names in mining to be invested in a small little silver stock. And
Mhm.
so when you look at SilverX's news late January, very positive production growth. If you look at their February 14th PEA news, very positive, but overlooked, right? Because silver was languishing at the time. So I'd encourage investors to go back and look at that news. And then lastly, Guanajuato Silver, which is known as G Silver. I had a really good meeting with them in Toronto as well. I met their geo for the first time, Ramon. Ramon spent most of his, well, I don't know if it was most of his career, but a really large chunk of years with First Majestic, and was Keith Neumeier's right-hand guy in Mexico. So when you can pick up as a 28-cent, stock, you can pick up a guy of that caliber. Why do you think someone like Ramon is associating himself with someone like James and the team, right? It's like there's something going on there that's very positive. If you look at their news, they just had some positive news last week during PDAC. I mean, the news flow has been regular and good, and as a value manager, we like what they've done with their 2 complexes there.
Thanks for sharing. Those are some interesting companies for sure. So, would you like to chat about any of your other picks or subsectors when it comes to commodities that you find interesting?
Sure. So, in no particular order, we put out a piece first thing this morning saying that palladium and platinum look like they were getting short covered. They have been heavily shorted as commodities.
Mhm.
So I would have take a look at that. The tickers are PALL and PPLT. Those are the largest ETFs that track those 2 commodities. Um, for something going back to who I met with in Toronto again, just as an update. There's a royalty company called Vox Royalty, VOXR. They uplisted to the NASDAQ last October. You know, when you look at the royalty space, Aaron, it's really interesting because last year Nomad got taken out by Sandstorm, and you had Mavericks do a deal with Triple Flag, and the space is definitely of interest to the bigger companies or the mid tiers. So I think something like Vox it's just flying under the radar. They've got, 6 projects that are producing right now. They're moving to 8. They're well diversified by metal, so they're not, 90% gold. They're all over the place, and geographically, they have a lot of their assets in Australia, which I think is a great jurisdiction. And lastly, Transition Metals is a little company that I have had a position in for quite some time. Over the last 2 years, I met with Greg Collins and Scott McLean for the first time, and they formed a really interesting little company that is, formerly I guess would be classified a project generator, but now they've really focused their efforts this year on the drill bit, and they've got a couple of projects that I think are going to start getting some more attention from investors. Because Fundamental Research just wrote them up February 28th and basically echoed what we've been saying, which is the projects like, Maud Lake, Pike Warden, Sunday Lake, all of these things are basically trading for zero. When you add up the assets of their royalties, the cash they have in the bank, as well as the stock that they own in certain companies, that is their market cap right now. So all of the projects that they have are basically, for free, if you will. And so as value managers, we like that kind of an approach.
Definitely, John. Well, it's been a pleasure. Thank you for all those updates, and I look forward to having you back on. I'm sure it will be soon, and we'll be chatting about gold, silver, commodities, and we'll see where we're at the time. Maybe gold can crack 2,000, but who knows?
That would be great. Thanks a lot, Aaron.
All right.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.